I think this is going to be a big political topic
100%.
this fall, right? New Hampshire, they want to build some data centers up north because there's a natural cooling element to building centers in the mountains.
Yeah.
But they don't have the talent, the labor force to actually build and then sustain the data centers up in like Berlin, New Hampshire,
where there's like nothing around.
Right. So then they want to build them down here, but it's more populated, right, in the southern part of the state, and nobody wants it. And so like people are protesting it, and people, some of the landowners are like trying to find sneaky ways to say, hey, I'm going to put in a warehouse that could be used for anything. I don't know what it might be. It's also going to be the size of 100 football fields and get earmuffs. And I think it's going to be a topic that people are going to be concerned with for the next 6 months and then beyond.
I actually think we're at the very early stages of AI build out.
Yeah.
Personally.
Welcome to the Compound Growth Podcast with Colin and Wheeler, where we talk all things growth. From financial growth to career growth, personal development to societal progress, we explore how each layer builds on the next, compounding over time to shape who we become. Each week, we break down complex ideas and emerging trends into clear, actionable insights. Because growth isn't just about numbers. It's about understanding the world and our place in it. So I was, as you know, traveling last week, and we went to Vegas. We flew into Vegas. We saw a show, 2 shows, and then we drove over to California. And last week was the first time that I really seemed to feel inflation. I was like,
are you becoming
why is everything so expensive?
Back in my day.
And I know that Vegas does that. Like they price, I expected to pay like $12 for a beer.
So what are some examples of things that were outrageous?
Well, so the first time we sat down for lunch, we went to, it was the 3 of us, wife and daughter and myself. And we go to this restaurant for lunch because we're starving. It's again, we flew cross country and, the flights are never a good time. So we go to lunch, it's like 1:30 and we're starving. So we order, an appetizer and then a entree each. And then like 1 beer and 2 lemonades.
Okay.
It was $250.
Oh my God.
I was like,
is this right?
Where am I? And then, so obviously, so I knew Vegas was going to be expensive, and then California doesn't have a reputation for being cheap.
No.
But then also just like paying for the gas. Like I drive an electric vehicle, so I haven't paid for gas for a while. So I had to pay, dude. I prepaid because he's like, look, it's $6 here, but it's $7 in California a gallon. So you better just fill up now. And I'm like, I appreciate that, rental car guy. That's exactly what I did.
Cost cutting.
And, but then everything was so expensive. And it made me think about, obviously, the experience that a lot of people are having when it comes to inflation. Like everybody's been complaining about everything being expensive. And I recognize that the prices have gone up on things, but like, do I care that I'm paying $6 for eggs instead of $5 for eggs? That's not like making a big dent in my wallet.
You maybe get like 2 dozen eggs a month.
Right, exactly.
You're not going to notice the $2.
Yeah, but everybody, complains about the egg prices.
Right.
And there's inflation obviously up across the board, but it felt like I was like seeing into the future a little bit more. Like if this is, essentially, we're in a country right now that is like determined to run hot. Like we're running the economy pretty hot. We're going to grow our way out of it. That's what it feels like right now. Obviously, there are millions of people living in California dealing with this every day. It's not just
$7 for
gas.
That's crazy.
A gallon. And it wasn't, look, that's rounding. Right?
Sure.
Like, I think in reality, the highest I saw was like $6.79 or something like that.
So pretty close.
Yeah. When I was out in California, 2008, I think, was when the gas prices were really high. There was like $4.50 a gallon. And that was like, oh my God, the gas is so expensive.
Well, what's crazy if you think about that, if you have a Honda Civic, very reasonably priced car, the gallons that you need to fill up that car is 10 gallons. It's a 10-gallon tank.
Okay. So
every single time you fill up that car is going to be $65.
Yeah.
And if you fill it up once a week, driving back and forth to work and dropping your kids off, that's $280.
Yeah. And you're used to it being $40.
That's more than your car payment.
Yeah.
Probably.
Yeah, well,
depending on the car. But yeah,
not a lot of Civics driving around anymore. But
no, that's true.
But yes, and actually California is great for keeping like those types of cars running too. So you see, but yeah,
that's outrageous. Well, when we were in Europe, we were talking with a few European citizens who were like, "Oh, we want to plan trips to America, but it's so expensive in America." And like, you're right. They all want to go to New York and Vegas and LA and Miami and all of these places. Everything is so freaking expensive. And even as a US citizen, you go to those places and you're like, how can anyone afford to be here?
Yeah, seriously. Well, I heard Scott Galloway say recently that the United States is the best country in the world to make money, and Europe is the best place to go to spend money.
I think that's pretty spot on. Yeah. Your money goes so far over there. It's crazy. But anyway. Yeah.
All right. So
let's get into it. Some market news, updates, fun stuff.
Yeah, we're trying a new format today.
Yep.
Right. We're going to go through and just like check off a couple of areas of interest.
Yep.
Right. Some headlines, what's going on in the world, and how does it relate to us, what we do, what clients would be interested in. We have a variety of things, variety of headlines that we can walk through. A lot of these stories I've been hearing about.
Yeah.
Right. So what jumps off the bat? Let's start with AI. Tori's favorite subject.
Tori's favorite.
What's going on in AI, Colin, that you found interesting?
Well, big tech, AI in general. CapEx hits $630 billion in Q1. So right away, Microsoft, Meta, Google, and Amazon collectively put $630 billion towards AI infrastructure just in Q1 of this first quarter alone. Just in the first quarter.
Yeah.
So that spend is outrageous, you know, in terms of an actual dollar amount. And as earnings season kind of mostly comes out, the earnings are quite positive and quite up despite this CapEx expenditure.
Yeah. What's interesting about this whole build out right now is that it doesn't seem exhausted. It feels like it should seem exhausted. Like if you look at some of the stocks involved with the AI build out and the infrastructure build out, it feels like they're through the moon and, we must be reaching the end of the road. But there's constraint, right? There's compute constraint. There's not enough to go around right now. And so you're building out all these data centers, for example. Nobody wants data centers.
Are you worried about data centers coming into the seacoast?
So data centers are suffering from some NIMBYism right now. It's not in my backyard, right? Nobody wants data centers around them.
No.
And it's understandable because of all the noise pollution, right? The literal like water pollution.
It sucks up all the water and resources around you.
Right. And New Hampshire is an interesting place for this to kind of play out politically, because I think this is going to be a big political topic
100%
this fall, right? New Hampshire, they want to build some data centers up north because there's a natural cooling element to building centers in the mountains.
Yeah.
But they don't have the talent, the labor force to actually build and then sustain the data centers up in like Berlin, New Hampshire.
Where there's like nothing around.
Right. So then they want to build them down here, but it's more populated, right, in the southern part of the state, and nobody wants it. And so like people are protesting it, and some of the landowners are like trying to find sneaky ways to say, hey, I'm going to put in a warehouse that could be used for anything. I don't know what it might be. It's also going to be the size of 100 football fields, and get earmuffs. And I think it's going to be a topic that people are going to be concerned with for the next 6 months and then beyond.
I actually think we're at the very early stages of AI build out.
Yeah.
Personally. I mean, if you look at the .com bubble, people think about 2001.
Yeah.
But the .com build out was many years before that. Like, I think there's going to be a build up to AI expenditure. I don't think it's going to slow down anytime soon. Personally, I think like data centers in general are going to continue to get built out. And as more and more of these data centers get built out, there's going to be more spending.
Yeah.
So eventually I think we'll probably hit some sort of a wall with this spending, but I don't think it's anytime soon, especially when you see earnings shooting up. I mean, Meta's up 31%.
Well, I think, and then, obviously we have all the AI companies coming. SpaceX is basically just an AI company at this point.
Yeah. And I mean, that IPO'd and
amazing.
Yep.
what that Dan was telling me yesterday.
Was that $2.13 a share yesterday?
Yeah, it went up another maybe 8% by the end of the day. But and then it surpassed Amazon in market cap. It surpassed Microsoft in market cap,
which literally makes no sense.
It's like the 5th largest company in the world right now,
which produces no revenue.
Well, so apparently, I don't know how profitable they are.
Well, that's the thing. It's like no one knows yet.
Well, everybody's promising them these contracts. Like, hey, Google's like, hey, we'll pay you, $300 million over a month or whatever. And what does that mean? Is that enough for them to actually be profitable? Is $300 million enough a month for SpaceX to be profitable?
That's literally a drop in the bucket.
Yeah, I mean, I think it's concerning to me when I see something like this. And Dan was telling me yesterday that it's only 5% of the market. Of the value of this company is available in the market, meaning that the float, the stocks that you can buy, if you bought all of the SpaceX stocks available in the market, you would be a 5% owner in the company, right? Because so much of it is still held privately, right?
Is that because of lockups, or is it just?
It's a combination of factors, and yes, the lockups will release and increase the float,
right?
Little by little and sooner than normal,
later,
right? Like, so I think we're going to see those lockups come in the next couple of months or expire in the next couple of months. And then
so
depending on earnings, more shares will come to market if the stock is up. I think it's like 10% over X certain days after earnings, right?
Yeah.
So that will happen. But right now it's just like we're shooting the stock price up, but there's only 5% of the company trading, and most of it is still owned by Elon Musk and early investors.
Yeah, I know. It's just crazy. You see these numbers like $630 billion in build out. SpaceX, the IPO, largest IPO ever, and the fact that that's just shooting up in price over the last few days. Now, granted, it's only been, what is this, the 3rd day of trading today?
Yeah.
4th day of trading. So I don't know. We'll see. But these numbers are just so huge that you just wonder how sustainable this is long term.
Well, and I think it's worth pointing out that the build out is almost a build out that nobody wants outside of Wall Street.
No,
it's most people are not, like, end users are not really using AI.
I feel like throughout all of this, we look at like a lot of the same companies: Microsoft, Meta, Google, Amazon. Now we have SpaceX in there. Apple.
Everybody likes Apple still.
Everybody likes Apple still. I feel like they're sitting on the sidelines a little bit.
Yeah.
Which I approve of, personally.
They've been patient. They're letting everybody kind of eat themselves, and then whoever wins has to go through Apple. So
right. Yeah.
Elon Musk is not actually developing a smartphone in any of this.
My sister just signed up for
Starlink
for her house.
Yeah.
$30.
But AI, definitely not Tori's favorite subject, right? A lot of people pretty anti-AI, a lot of college students walking out or booing keynote speakers.
Yeah, I know. I actually saw a lot of those. You mentioned it, and then naturally, after you mentioned it, I started to get pushed all this stuff.
Oh, of course.
And I didn't realize that there was such negative, like feelings about AI for younger generations.
Well, I think it's feeling, there's like is it nihilism or nihilism? I always say this the wrong way. But it's essentially a feeling that the future is not going to hold something of value for you. And if we look at one of our headlines is the SaaS apocalypse is worse than anyone admits. We're starting to see more layoffs in the tech industry. And, some people would argue that that's because the companies were bloated and they had to shrink their headcount and they're using AI as the excuse. But at the same time, you're just not going to need as many employees in a lot of these large companies, right? Our small company isn't going to shrink headcount because of AI, but a large company with redundancies across the board will find opportunities to shrink headcount, right? So then people are getting laid off and having a data center built in their backyard, and that sucks.
I was just doing a charity golf match yesterday, and one of the guys that I was partnered up with owned a pretty decent size dental practice.
Okay.
And I think they had multiple locations and things like that. But he was talking about running his business and how when he first started, the company culture was so important to him and it was easy to maintain because
it was like one location.
Because it was like one location, and he had usually anywhere between 4 to 6 employees. And then he noticed that once he got above 7 employees, and then once he got above 10 employees, like you needed an HR department, you needed to have company-wide meetings, you needed to have policies, you needed to have all of this stuff. And the feelings of the small company went away very quickly. And we were just talking about with the other person I was partnered up with who owns basically a cybersecurity company. He was saying like the goal for him and his company is to keep his company smaller using very good systems like AI so they can maintain that culture. And that to me resonated because to your point, you don't need to hire as many people, but hopefully that will keep like small companies. It makes it easier to scale a smaller company.
Yeah, it does. I think not hiring doesn't have to equate to firing or vice versa,
100%.
right? But it is going to a degree. And I think what's tricky to predict is when the mess happens and what the mess looks like, right? Because we've been talking now, one of the first things we talked about in this podcast was, inevitable rise in unemployment as a factor
as a result
of
AI.
And we are kind of seeing it, but you also you can no longer trust, the employment numbers.
No.
So it's hard to see what this actually looks like and what it really feels like. But I have an inkling, like an idea that it feels a lot like my exposure to higher prices last week, where it's out there. I'm just not dealing with it.
I mean, I can't put myself in the shoes of someone that's dealing with a lot of turnover right now in companies, but certainly I think big tech companies in general are looking for ways to continue to scale their profits so they can sink more capital expenditure into AI infrastructure and build out.
Yeah.
Probably the ROI for them hiring more software engineers is a lot lower than building out a data center.
Yeah.
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 I don't know.
I don't know. Are the robots building the data center?
I don't know. That's the thing. But they seem to be pumping a ton of money into this. So there's a reason.
Yeah. All right. Anything else on AI?
No.
All right. Let's move forward.
Sounds good.
Let's talk markets and economy. Colin, is Kevin Warsh, is the Fed Reserve led by Kevin Warsh going to cut rates?
I actually think it's going to hike rates.
Okay. Why do you think it's going to hike rates?
Well, because just what we talked about at the beginning of this podcast, inflation is very sticky. But on top of that, I mean, the 10-year, if you look at the 10-year, we hit, 4.7 last month or something like that. It was very close to that. And it continues to remain high. So, there haven't really been in our existing economy, like it's been very good just in general, but I don't see a reason for them to cut rates. Like normally when there's a rate cut, you have to have a reason to cut rates.
Right.
So we haven't seen that yet. And the market's pricing in before the end of the year, a potential rate hike. So whether or not that happens remains to be seen. And as we know, a lot can change in 6 months.
Yeah. The market was pricing in 3 cuts and now it's pricing in one hike. Yeah.
Yeah. What's your take?
I think that I think he's probably going to just hold rates. I think he's going to come in and just like not do anything at first.
Yeah.
I think that his MO is that the Fed should do less. And I think that's what we're going to get used to. We'll stop hearing about the Fed so much, which is great. Because we've essentially been tethered to the Fed for years and it sucks.
I know. I feel like the last 6 years in general, the only thing we've been talking about is rates.
Oh yeah, interest rates, and
AI,
rates. Yeah, ever since COVID, basically.
Yeah.
Oh yeah.
Yeah.
So the Fed comes in and maybe they keep things where they are. Maybe they raise rates. I think the question is, why are they raising rates? If they're raising rates because of inflation, I don't think that's the right reason for it, because I think that the inflation that I experienced last week is not typical necessarily of just inflation across the board in the country. So obviously gas prices are high, but that's tied to the Strait of Hormuz and the Iranian war,
which we'll get to shortly.
Yeah. So like, is that temporary? Is that transient? Or is it like a reason that you should raise rates? And I think the other things that are driving inflation, I mean, just the housing market's kind of frozen.
Yeah.
You're not seeing wage increases, so that's not contributing to inflation.
Right.
And you theoretically could see a decrease in wages earned, holistically across the board if you see more people unemployed, which would certainly not make things inflated. It would probably deflate a little bit.
Right.
So it seems like if we're raising rates right now, it's a very temporary concern. I think that I'm not sure I understand why we'd be doing it.
I don't know either. But at the same time, to your point, before everything went down with Iran and the Strait of Hormuz, oil prices were low.
Yeah.
Like it was very affordable. It was very reasonable. And then the moment that this broke out, they went up to, depending on your state, they went up dramatically in value. For us, it's like $4.60 a gallon. But, who knows what it is by the time we get out of here. So long story short, I agree with you. I think it's too tough to predict right now what's going to happen because we have a war and very high oil prices. We have all of this build out that's going on with these companies, massive layoffs that are happening. But when we say massive layoffs too, what's kind of funny is like you hear these stats about like, 4,000 jobs being cut, with some of these major companies or 10,000 or 8,000 or whatever it is. And that sounds like a big number, and it is. But if you look at like historical numbers, like that's not that crazy in terms of like the number of layoffs.
Yeah. Yeah. I think that's one of the reasons that you have to understand historical reference, like historical perspective.
Right.
Right. Because if you don't have that historic awareness, then everything seems like unprecedented or really bad.
Yeah. I can't remember the stats for this, but I'll look it up here. There was a stat that was released where it was talking about like the number one that lays off the most jobs is the U.S. government by like tenfold. Have you seen that?
Yeah. Okay. I don't think we should talk about that because that obviously those stats are going to be influenced by anything that Doge was doing. And that's essentially a mess.
But I mean, even going back in history, like going back to like the 90s and 2000s and all of those.
I mean, we've seen an increasing headcount in the U.S. government overall for the last X number of years,
right?
Decades. That's literally one of the reasons that like Elon Musk came in with a hatchet, right?
Right.
So I don't know. It's possible that isn't the government like the largest employer?
It is
single employer. So yeah, sure, they probably have the largest layoffs because they have the largest headcount.
Yeah.
But is it laid off? Like, are you laid off from the government? I don't think that's the way that works.
Yeah, I don't know. But there was 1.2 million jobs cut in 2025.
Yeah.
2020 COVID was obviously the highest. It was 2.2.
Yeah.
So, yeah, I mean, the labor market is quite strong still, but last year was significant layoffs. So, it's certainly elevated this year, but only in specific sectors. I think tech in general, that's the thing. Like healthcare, the hiring, they are like actively desperate and seeking people to hire.
Yeah, I think that, I think it depends on what part of healthcare it is because you're also seeing a lot of M&A in the hospital, right? The privately owned hospital area. And that's leading to a shrinkage in headcount there as well.
Well, like I know Kaylee's hospital is getting bought out. And
right.
They're posting 1 million job listings because they need people to staff the hospital.
Well, because they're getting bought out and continuing to operate.
Yeah.
Well, which isn't always the case.
No, it isn't. But you need to have a hospital within a certain amount of geography. So,
right. It's in the big city where like there's 6 or 7 hospitals. They don't necessarily need all of them. Like look at Boston, for example.
Sure. Yeah. I mean, Boston, I don't know about Boston.
Yeah.
But yeah, I mean, I know that just in general, the tech sector is definitely the number one culprit for layoffs in general.
Yeah.
But
yeah. Well, it's where all the noise is.
Yeah. But there are definitely a lot of sectors that are hiring actively.
Yeah. Let's talk about this Washington Post article. The American savings rate falls to lowest since 2022.
Yeah, this is a good one.
Yeah. So I think sometimes I don't know if I want to blame the writer or the editor or the publisher, but the headline doesn't always necessarily equal the narrative, right? And I think sometimes people see the headline. I was joking with a friend of mine because I went to the Sphere and I saw No Doubt and it was a great show. It was amazing. And my friend's a big Metallica fan. I'm like, oh, you should go see Metallica, this winter. Yeah. And I send him like a link. And the link at the top erroneously says Metallica at the Sphere June and July. He's like, oh, I'm busy this summer. And I'm like, first of all, I just told you it was the winter. Second of all, if you scroll down, you can see all the dates. Like if you just move your thumb a little up that screen, you're going to see that headline is wrong and all the actual real dates are right below that.
Yeah.
And, you give me shit for being grumpy about it. But I think that it's so easy to just not think past the first impression on things. So, this article talks about like inflation is eating 4.2% of purchasing power. But in reality, if you're in a money market account, for example, or high yield savings or anything like that, you're getting 3.5, let's call it 3.25.
Yeah.
Then inflation's eating 1% of your purchasing power.
That's true. Yeah, it depends on what you're offsetting it by. Now, most people don't have a lot of money in money market accounts.
No, that's true. But they should if they work with the right financial advisor.
They should if they work with the right financial advisor. That's the key. But I do think that this is generally that's probably one of the biggest problems with inflation is people's savings rates will go down. That's one of the key cuts that people make is to contributions to retirement accounts.
Yeah, and I guess if the Fed raises interest rates, they'll get more to battle the inflation in their savings account.
Right, exactly. So, I mean, who knows what's going to end up happening with people's savings rates long terms, but if you go back to what it was in the 80s, people are saving less. But I mean, that's what happens when you have very little wage inflation compared to the actual inflation of purchased goods.
Well, I think that's certainly a problem, but I also think at the same time that people are comfortable spending. So you see savings rates go up when people are worried and when they're comfortable spending, or maybe they're spending to self-medicate.
Right.
That's not a good thing. But I think that seeing the savings rate, it's easy to conflate this with the article, like the average American has $250 in their checking account or something like that.
Yeah, they can't, or like a $2,500 expense would debilitate them.
Right. Yeah. And that's a real experience for a lot of people out there.
Yeah.
But when we just broadly say, here's what the savings rate for the United States is, that's just, you cannot paint all the colors with one brush. It's way too messy. But I think that sometimes what gets lost in the data is what's happening in the rest of the world. And people have either not felt the need to save recently because they felt secure, and they maybe felt secure because of their the size of their portfolios, their jobs, whatever. But also they had a lot of opportunities to save. It's like we have clients, we tell them to build an emergency reserve.
Yep.
Once they do that, they don't need to continue building their emergency reserve.
It's done. That box is checked.
Yeah, exactly.
Yeah.
So they can put that towards something else, but they can also put that towards a trip or whatever.
Well, I also see too that people's spending rates are going up a lot, especially amongst our retirees, because the market's grown so much.
Sure.
It's probably sustained pretty healthily, like a 6 to 8% withdrawal rate on the portfolios over the last 5 to, probably 15 years, because the average S&P returns 13.5%.
For sure.
Which is crazy. So people's spending is going up and up, which if people's spending is going up and up because the market's driving their portfolios higher, then they're going to be saving less.
Yeah.
And it does misconstrue the numbers a little bit. And, people spending more isn't necessarily a bad thing, but, however big the withdrawal rate is probably not sustainable long term if we do bump into a recession. So just people have to be aware of that.
Yeah. I think it's interesting. We have a new client who's a farmer, and she was talking to me about her healthcare premiums, right? Just on a monthly basis. She's spending like a little over $1,000 a month in healthcare premiums.
Because she retired early.
She's not, no, she's a farmer. She's literally working. She works as a farmer.
Oh, I see what you're saying.
Right?
Yeah.
But she has private insurance because it's not offered.
Because she's not on Medicare.
Right. Yeah. Exactly. So she's 50 years old. She has to have insurance. She's in the state of Vermont, and it's $1,000 a month. Let's call it. Right. On her income, that's a significant portion. Gassing up her tank is a significant portion. If her income was, instead of, let's say, $35,000, it was $135,000 or $235,000. That expenditure feels less. It feels egregious, like it shouldn't be that much, obviously.
Right.
But it has a smaller impact on everything. And in reality, her almost minimum wage essential lifestyle right now is not the norm, but it's a very loud source of data because there are people in that situation. It's just that that's not the average.
So what we're saying is basically that in her particular situation, because she's a farmer and she doesn't have a high level of income per se,
right,
the little expenses seem big.
Yeah, exactly. Which is why it's interesting to me that you had Jeff Bezos was on CNBC like 3 weeks ago, maybe talking about how there should be no income tax for anybody, I think, earning less than $100,000 or something like that, right? And he said that, Jeff Bezos, should pay, X number of, millions of dollars in taxes, but these people should not pay anything in income tax. She's not really paying a lot in income tax.
No,
her
that's
FICA
the
tax
thing.
sucks. Her FICA tax is a portion of her income
Right.
is really, really high. So he's focusing, I think, on one of the two taxes that really needs to be focused on. And maybe it's the one that doesn't hurt her as much. But it's just interesting to me when you look at these generic broad numbers. It's not the same across the board. And it really agitates people to hear these numbers.
Yeah.
Right. To say spending is up. Yeah, sure. Spending is up. Elon Musk is spending a lot of money after his company just, everything that he spends gets factored into the overall number that we all talk about.
Well, it's also like totally, Elon Musk spending a lot. Like if he spends $50 million to go buy a new house or something, it's like, it's going to affect the number. But to him, that's like a $50 million expense to him is like the equivalent of you and I spending $1,000 for tires on our car.
Yeah, people definitely don't know how much $1 trillion is.
No.
And it's so hard to wrap your minds around as a percentage of income or net worth or whatever.
Yeah.
Yeah.
A 5% interest payment for him, like on his money, is $5 billion.
That's just going to piss people off.
But it's true. That's how math works.
Yeah, no, it is. That is the math thing.
Yeah, it's nuts. But yeah, you can't just look at this as a broad statement.
Yeah, I think this is a long way of saying that when we see numbers like this, they are scary, but we shouldn't peg ourselves to any overall percentage. People are always saying, like, how much should I save? I should save 10%. I should save 15% to my 401k or whatever it might be, because that's like a rule that like a percentage is like a rule that you can align yourself with, when the answer is always personal. It's always comes down to your individual situation.
Yeah. I know people who only saved like 5% into their 401k and absolutely killed it because they had 2 pensions.
Elon Musk could not save 5% into his 401k. Literally cannot put that much money in it.
No, he could. Yeah, I can't. I don't even know the decimal point. It's just a lot of zeros in front of the one.
He does not have a 401k.
No, he doesn't. What's he going to do with that? Yeah, what's the point?
Yeah.
So, all right. Question for you.
Yeah.
Will the Iran deal hold?
No.
Okay. Why?
Because they never do. They're not even deals. They're just like the framework of a deal. Like it's a peace deal if these 8 things happen by this time.
Yeah.
The question is, does it matter? Because I think that obviously it doesn't seem like anybody wants to be in this war.
No.
Right? I think the question is, like, is this a good enough excuse to get out of it? Like, I don't know if whatever the deal is, like the deal could be Trump got booed at Madison Square Garden and told everybody he was cheered. I don't think it matters what the truth is. Yeah. I don't think you need to have a deal. You could just back out. And I don't think it literally matters to him one way or the other. He will tell the American people whatever he wants to tell them.
Right.
So then it's just like a matter, I guess, on a global scale, which I don't know. I'm not a geopolitical expert, but I'm not sure how weak or strong we need to look to China. All right, let's wrap it up. 2 headlines in our behavioral finance and psychology section. Spending's up, feelings are down. Consumer paradox of 2026. I think we kind of talked about that.
I feel like we got into that already.
But I think that there is certainly an amount. We talked about this with buy now, pay later, for example. People spending regardless of whatever because it helps them feel happy, right?
Right.
So if they can't afford those tickets to Coachella, they'll still go to Coachella.
And they'll just finance it out.
They'll figure it out later.
It's kind of like AI build out.
Yeah. So I don't know if we need to spend too much time on that. The private assets are coming to your 401k. This is what we've been talking about with private credit, right? How are you feeling now? Because private credit kind of as a boogeyman kind of stepped out of the closet and then back into the closet. And where no one's talking about private credit anymore.
No one's talking about private credit anymore. But I think this is a very slippery slope because we always talk about this. The biggest advantage of stocks and bonds in the market in general is liquidity. Someone wants to buy a house, they give us a call, they need cash. We can get the cash for them within 48 hours.
Sure.
Private credit and private assets in general, you cannot do that. We have clients that have REITs that were sold to them from prior advisors that we've had for 11 years that I still cannot get out of, and we're just riding this shit down.
Right. So you're saying as an investor, if you need access to your money and it's in private credit, you can't get it right away.
You can't get it. And it doesn't necessarily need to be private credit. It could be other private assets,
Anything
or alternatives,
private,
whatever it might be.
SpaceX stock.
Exactly. Yes. But the lock periods on these things are not to be scoffed at. They are legitimate. It's difficult to get out of a lot of privately held assets. But what this reminds me of is kind of what we were talking about with the SpaceX episode. It's if you can't get more investors investing in your stuff, then you need to find a new market. And it's like, this is what it's going. Like, they need to drive revenue up. They need to pump up investment. And the easiest way to do that is by tapping into a sector where they're going to get continuous flows, which is your 401k.
Yeah.
It's not necessarily something you want. It's not something you signed up for. It's not something you'd buy outside of this, but it's going to be placed in your account regardless.
Well, is it? I think if it's part of a target date fund.
That's my point.
Yeah,
like
if
a
it's
target
a
date
fund.
Yeah.
That's certainly an issue. If it gets to be intertwined with the target date funds.
Which it will eventually. Like, if you're going to get the option already.
Yeah.
It's just like a client was signing up for a new 401k the other day, and I can't remember who the provider, it might have been Merrill or John Hancock, but you can do the selections where it's like, I'll create my own portfolio, I'm going to do a target date fund, or build me a portfolio itself. In the build the portfolio for the client,
right,
there was automatically a sleeve of alternatives.
Yes.
Included in there.
Yeah.
So,
but those were historically like REITs and things like that.
Exactly. But now it could be private credit or private lending.
Yeah. Yeah. It's nefarious, right? The reason to democratize private credit, make it available to anybody who's putting $50 into their 401k is not a good one, right? It used to be that you needed to be accredited. You need to have a certain level of wealth, which would imply a certain level, like ability to take risk, right? Mm-hmm. That's how you need to have it. We basically need to say, I have enough liquidity that I don't need to worry about getting this money out.
If this blows up over here and I need to touch it, it's not a big problem.
Yeah.
Or I won't need to touch it.
I don't even need to touch it. It's just locked away in a piggy bank, and I'm not going to grab my hammer and smash it because I have all these other banks over here. And theoretically, the liquidity aspect of this in a 401k isn't really an issue. Like, theoretically, you shouldn't be tapping your 401k for years if you're early on into it. And then in retirement, you should be, in my opinion, rolling your 401k into an IRA. Yeah.
Right.
But the question is this necessary? And if it's not necessary, and it doesn't seem like it's particularly beneficial to the average Joe, then what good are we doing it for? What positivity comes out of this at all?
Well, I think that's the biggest question is, what benefit does this provide to the consumer that has the 401k?
Yeah.
I can't find one. Like, you could say, well, there's like a lack of beta with alts, but we know that's not always true.
Right.
When it comes to a lot of these private lending companies, they get smoked just like everybody else in a recession or whatever it might be.
Yeah.
And then oftentimes there's even more risk to interest rates on top of it. So there have been some funds that have done quite well in market downturns because they don't reprice in real time.
Yeah, because they get to say whatever it is that they price their own loans.
Yeah,
they check their own homework.
Yeah, I was going to say what's crazy about this is there's no rating agencies going in and being like, oh yeah, this loan you made is a AAA or anything like that. Yeah. They're literally just telling you, oh yeah, don't worry about it. That was a good loan.
Yeah.
It's up 8%.
Yeah.
We'll put that down this month.
Yeah. Or the market's down 20, but I'm only down 1.
Right. Yeah. 1. But you can't take your money. Don't touch your money.
Yeah.
Yeah.
I know that there are good private equity loans.
Yeah. I'm not here to talk crap about private equity and private lending because there are good ones out there.
There are. It's just that they should be where they're supposed to be. I don't think they need to be for everybody. I don't think that, honestly, I don't want it in my 401k.
No.
I actually don't want it anywhere.
Yeah. I agree with you.
Okay, cool. We covered a lot of territory. Thanks again, Colin.
Yeah. Thanks, Wheeler.
Thanks everybody for listening. Like, subscribe,
share with friends.
Please share with a friend.
Yes.
Can you share with a friend, please? How many friends are you share with all your friends all the time?
I'm going to share with all my friends.
Let's blast our entire.
Excellent. Sounds good. I will.
All right. Thanks.
All right. Thanks, guys.
The information in this material is for general information only and is not intended to provide specific advice or recommendations for any individual. Investment advice offered through Integrated Partners, doing business as Ko-Fi Advisors LLC, a registered investment advisor. Integrated Partners does not provide legal, tax, mortgage advice or services. Please consult your legal tax advisor regarding your specific situation. Past performance is no guarantee of future results. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful.
Compound Growth with Wheeler and Colin, sponsored by Ko-Fi Advisors. Reach out today. Yay!